Hello and welcome to Console Cowboys. So in today's consulting video, it's going to be a workshop for your finances as a consultant. A simple way to manage everything so that at the end of the day, you're investing and you're building things, not just ending up broke. Because a systemic issue that I see with consultants is they start making more money and they start spending more money. And they might make $500,000 a year, $1 million a year, and they have nothing to show for it, where I see other consultants making the exact same amount and they're retiring in less than 5 years. And the only difference between these two consultants is one of them has a plan and has good habits and the other one does not. So get out your pen and paper, download the spreadsheet that's on the screen, go through this with me, and come up with a plan for yourself that you're going to execute on every single month. On the screen, I have what we're going to call our personal financial statement that you're going to fill out as you go through this. After we go through a pen and paper session where we figure out our expenses, we figure out our investments, where we're going to invest with different types of income and why. We're going to fill this out, which is going to track everything for us from our different types of income, our expenses, our assets, our liabilities, etc., so that we can get everything in order and have a well-running machine that we can turn into an empire. One thing to think about before we hop into the pen and paper session is that we have to set our goals for the year, and that's going to determine what we're investing in. And we want to think about different things such as inflation hedges. We want to think about our cash that we have on hand, the cash flow we're making while we sleep, and the growth assets that we have that are going to give us exponential growth, because most money is not earned from earning money. It's earned from investing it properly, getting the growth, and then reallocating it into cash flow. So let's hop into a pen and paper session where we figure out all the particulars of your situation before we fill out this sheet that's on the screen. This is going to be a typical consulting scenario where we still have a W-2 job. We're making in that mid 100K range, which is pretty typical for a consultant who's been in the game long enough to start contracting on their own, which equates to roughly about $8,000 net after taxes per month. And then we have our contracting income. We don't know what that's going to be. It's going to be variable. So we're going to handle that in a variable nature for our investments. But before we can do any of that, we need to figure out what our expenses are so we can figure out how we're going to invest. So for our expenses, I have relatively low expenses because I don't have too many unnecessary things and I'm single, so I don't have to worry about kids and families. You might have more. I'm going to try to up this a little bit to more of a small family, so it's a little more applicable to everybody else. So first off, we have housing expenses. Then we have utilities, we have things like phone, and we have internet, we have cars, we have car insurance, all of those types of things. So we need to put those in our expenses column. Now, don't follow along with what I'm doing. Put your real expenses in here as well as replace the income with your real income so you make your own plan. So I'm going to say I have maybe a $2,000 mortgage, which is pretty reasonable based on previous mortgages I've had. And then I'm going to say, well, I spend about $100 a month for food, or rather per week, which is about $400 per month. So I'm going to more than double that for a small family of a wife, a husband, and a kid. So let's say $1,200, and I eat quite well, so this should be more than enough. And then let's say utilities, $200 a month is a pretty good estimate for heating and electric. Depending where you are and what time of year it is, it should average out to that. And then let's say a car of $250 a month payment is pretty reasonable, as well as car insurance of about $200 a month if you're not running into people and getting in accidents. And then let's say we also have a miscellaneous fund of $500 a month for random things that pop up, such as, needing to get the kids something for school or going out to eat or something of that nature. And then what we have to do now is add up these so we know our expenses. So let's do that now. You guys add up your expenses and I will add up these expenses. So 2,000 plus 1,200 plus 200 plus the 250 plus 200 plus 500 is going to give me $43.50 of total expenses. So I'll put that right here. And again, this is just a simple way to do this, but we need to be able to track these things. We need to write these things down so we can do something with them. And this is something people don't do because it's, I don't know, a triggering point for them and they don't want to know. But once you know, you can form a plan, and that's what we're going to do now. So we have $43.50 in expenses. We have $8,000 a month. If we take $8,000 and we minus our $43.50, we're going to end up with $36.50 left over. So let's put that right here. $36.50 is what we have to work with after our expenses. And the rule of thumb basically is when you start investing, you want to invest at least 20% of your income and then slowly over time reduce the expenses column so you can invest more, because you're going to start getting smarter with your expenses and it's going to allow you to invest more over time. So let's do a quick calculation. What is that going to be? It's going to be 8,000 times 0.20. And that is going to give us $1,600. That is what we're going to invest from our leftover money here. So we got $1,600. Now we have to decide what we want to invest this in. So pick something that makes sense to you that you can do almost automatically and not think about. So for me, I'm going to choose that $1,600. I'm going to send it direct deposit directly from my payroll into Coinbase as BTC. And then each month, once that happens, or once it gets something to more than I'm comfortable having on Coinbase, I'm going to send that to a hardware ledger to protect it from Coinbase going down or freezing my funds, etc. And the keys are in my control. Now what this does is it's going to protect me from inflation over time, and I'm going to get those upside growth every 4 years on the Bitcoin cycle. So it's a good investment for me. It might not be good for you, so choose something that works for you. Now, with that, we want to do it automatically. So I'm going to go into my payroll and I'm going to set it up where 80% is going to my bank. And then I'm going to say I want 20% going into Coinbase as Bitcoin. So we'll just say BTC. So now that's automatic. Now, what do we do with what's left in our bank? Well, we have $36.50, correct? So $36.50 minus $1,600 will give us $20.50 is left over. Now, the next issue that I see is that nobody has any savings. Everybody needs a bare minimum of 3 to 6 months worth of savings in case they lose their job, in case they have to leave their job, in case the world gets shut down, as ridiculous as that sounds. You need that savings. So we need to figure out is, what is, say, bare minimum 3 months that we can save up for to cover us in case we lose a job? So let's figure that out. We're going to say our expenses per month are $43.50, correct? Times 3, and that's going to give us $13,000 basically that we need to save up. So let's do that. We're going to say out of our $20.50 left over, we need to save up to $13,000 to cover us for 3 months at a bare minimum. You can also keep going with this till you have 6 months worth if you're more comfortable with that. Now, I know what you're saying. We just allocated all of our money and we don't have anything for fun, right? So let's take a little bit of this towards our vacation for our family. So I'm going to reduce this down where we have $1,000 that is going to go into a vacation/fun. That way I'm not ruining your life and you can't complain as much. And this is going to reduce down to $1,050. So in about 1 year, you're going to have all of your 3-month backup and you're going to have about $12,000 to go on a family vacation. Now, $12,000 is more than enough for a vacation. So let's say you only spend half of that on a vacation and you have $6,000 left. You want to take that $6,000 and invest it into something else. We're going to talk about some categories in a little bit, but you don't want to spend it on something frivolous. And then we want to think about, okay, well, with this 13K here, what happens when we get past this 13K? Well, we're also going to invest that, right? We can continue to 6 months if we want, or we can just start investing that $10.50 a month, and that helps, snowball the effect of our investing. And then we want to put all of this money that we're saving in cash, and we want to put that in an interest-bearing account. Right now, banks are making about 3.5%. You can get stable coins on like Coinbase at 4%. I would split up some money between a couple different places in case your bank goes insolvent or Coinbase goes down. You don't lose everything. You have it split up a bit, but you want to be making interest on all the things you're saving, not just leave them in a checking account, which is also as vulnerable and you're not making anything on. So now that we've figured out what to do with our W-2 income, we have a vacation fund, we have investing capital, we have all of our expenses covered, and we have a plan, we can talk about our variable income with contracting. Now, we don't know what we're gonna make on contracting. It might be $0 this month, it might be $100,000 this month. We have no clue. But we're going to do this based on percentages, kind of like we did with our payroll above, because percentages will handle every situation. So let's make up a mock scenario here. Let's say we're making, I don't know, $100 an hour on a subcontract, and we worked 2 weeks this month. So that's going to give us about $8,000 to work with, and we can split that up across different percentages. And we want to think about what those percentages are going to be. So this is where you're going to put on your thinking cap and pause the video real quick. Think about the types of things that you want to invest in so you can follow along. I'm going to put some examples here, but you don't want to follow this. This is just an example of how to split up the money. So that way, every single month, you know exactly what you're doing and you can build up over time without screwing it up. So let's allocate these into percentages. And we want to think about the things we talked about earlier, such as the inflation hedge, your cash reserves, your cash flow, and your growth. I'm going to start out with some growth here, and I'm going to say, okay, the first 10% I'm going to put into Ethereum and Bitcoin as my growth because it also works as an inflation hedge and it also works as staking income once I get enough Ethereum. And I'm also going to make sure that I put this into a ledger or some other hardware wallet so that I control it and it's not sitting on an exchange. But maybe I want some more explosive growth, so I'm going to take maybe 5% of that and put that into altcoins. But I don't want that to be in any altcoins. It has to be altcoins that are solving a hair on fire problem that's going to grow over time, not something that's trendy. And I want those to be staking altcoins so that I can start building cash flow within crypto for myself. That way, if I'm buying them for, say, half a cent, and it eventually goes up to $3 or $4 and it's making me 4%, that drastically compounds the staking income that I'm making. So that might be a good way to go for explosive growth as well as a little bit of cash flow for myself. And then I want to think about, okay, those inflation hedges. What are those going to be? Well, we have a little bit with Bitcoin up there, but let's do some traditional stuff here too. We're going to say we're going to take 5% into gold and silver. And this is going to be physical gold and silver that we put in a safe somewhere, not paper assets that are on a screen in the stock market. So you can go to a website online, you can buy these and put these into a safe somewhere, or you can have it stored overseas somewhere, whatever you're comfortable with. So that is what we're going to do for our inflation hedge. And now I'm going to think about, okay, we want a pure cash flow type of thing. We have a little bit of cash flow from staking, but let's go more with the traditional way of doing things. And let's put some money into real estate. So I'm going to say I'm going to do 30% into real estate. But when I do real estate, I don't want it to become a job. So I don't want it to be something that, you know, I'm managing and doing things for. It has to be managed. And I also want the real estate benefits. So I don't want it into some kind of, you know, fund online that anybody can do, that they don't get, you know, the depreciation, they don't get the tax benefits, they don't get the cash out refis to compound everything down and make a lot more money. I want something where I'm getting all those benefits. So I'm going to say I want real estate in an apartment, maybe a syndication might be easy to do. And, you know, I'll put a big chunk of money in there once I get it saved up. And what'll happen is, you know, I'll get my cash flow, it'll be depreciated, so I won't have to pay as much taxes on it. And then I'll get those cash out refis so that I can get all of my money out of the deal and then do another one basically for free, but I can double down. So that's how I'm going to handle that. And this might take you a while to save up enough to actually get into one of these. But again, you're going to put this into an interest-bearing account while you're building that up. And then what else do I want to do? Well, I also need those cash reserves for my business. Maybe I have to buy Nessus licenses and burp licenses, those types of things. Or maybe I have cash reserves for some payroll stuff. So I'm going to say, okay, 20% is going to go into cash. And that cash is going to build up into maybe, I don't know, $10,000. So that way I have, some working capital to always dip into when I need to do stuff for the business. But after $10,000, I'm going to allocate that into other investments. Now, these other investments could be doubling down on your apartment, so that way you can build up quicker. It could also be something like stocks, if you want to do that and you're familiar with that, or it can be anything else that you want. You just decide what you want to do with that once you get past that $10,000 threshold. And if you spend some of that $10,000, keep allocating to build it back up to $10,000 before you go into other investments with it. Now that leaves the one big thing you have to do, which is your biggest expense, and that's going to be your taxes. Now let's say that you live in a tax-free state, hopefully you do, and that you're not quite at the 40%, which is our highest tax bracket right now, roughly. You're at a little lower because you're just starting out in this. So we'll say we're allocating our 30% to taxes. Figure out that with your accountant, how much you have to allocate, because you're going to pay these, each quarter he should be giving you estimates to pay, right? And you also want to put these taxes into an interest-bearing account, right? That way you're building income off of your taxes that you're saving through those 3 months, and then you pay those taxes, but you made a little bit of interest on them. So now we know exactly what we're going to do with our contracting income, and this is going to be automatic every month. We just have to figure out each month how much we're putting into each thing. So we can easily do that right now. So we have 10%, 5%, 30%, and 20. So we'll say we have 8,000 times 0.10, and then we have 8,000 times 0.05. We have 8,000 times 0.20, and then we finally have 8,000 times 0.3, right? So we have 800, 400, 1,600, and 2,400. So we now know exactly what we need to put in each category. So we're going to put $800 into Ethereum or Bitcoin, or a combination of, $400 into altcoins that are legitimate, not trendy. And then we're going to do another $800 or another $400 into gold or silver, or a combination of. And then we got the 30% into real estate here. So I'm going to do the 2,400, which is going to be going towards real estate, as well as our cash reserves is going to be $1,600 per month. But once we hit our $10,000 cap, we can allocate that and double down on real estate, or double down on other things, or invest in something else like stocks. And now what we have left is our 2,400, which is going to be our taxes. We're going to pay this quarterly. We're going to have this in an interest-bearing account so we can make some money on that while it's sitting there. What we now have is a plan for our income in different stages, from our W-2 income to our contracting income, and you've allocated this to various things that made sense to you in investment categories based on your real expenses. Right here in our fake expenses, we have $4,350. You used your real one, used your real income, and you figured out these numbers. What we ended up with is all our expenses are covered. We have investments every month. We did this automatically from our payroll. We have our cash reserves in case something bad happens to cover us for, say, losing a job. We have our family fun time with our vacation, and everything's making interest in accounts. Then we had our variable income. We don't know how much we're going to have each month. So what we did is just put this into categories of percents. We can calculate these each month very simply, and we know exactly where everything's going, so we can build up everything over time. And now what we need to do is track these in our personal financial statement. That way we can see everything grow over time. And this is something we'll update maybe every 3 months, or every 6 months, or once a year, depending on how fast things are changing, so you can see things change over time. So in our personal financial statement, we're going to start tracking everything, such as our income. We're going to track our expenses. We're going to track all of our assets, etc. That way we know exactly what's happening over time. So in our income category, we'll start with, we have our earned income, which is us working. We have our portfolio income, which is stuff like, dividend stocks and staking rewards from crypto, etc. And we have our passive income, which is like our real estate or private money lending or our business passive income, right? So let's fill this out. So first off, we have our earned income. We know this is going to be $8,000 for our W-2. And we know this is going to be $8,000 this month for our contracting income, right? But our contracting income, we need to take the expenses out. That was $2,400 we figured out per month. And now we have our cash. So we're going to pretend we're 2 years in the future for the purpose of filling this out, right? So we said that we were going to build up $13,000 as our backup cash. We're going to build up about $12,000 a year, which is going to be our vacation and our fund money. And then we also have $10,000 for our business. So if you add all of those up, it's about $35,000. Now, we're going to be getting interest on that in an account. Right now, accounts are making about 3.5%. So we'll calculate this as 35,000 times 0.035. And that's going to give us 1,225, but we need to divide that by 12 because there's 12 months in the year. So 1,225 divided by 12 is going to give us $102 a month. So let's put this in here. We're making $102 a month from our cash reserves. And then we have stuff like dividends and staking. So if you slowly built up an Ethereum to get an Ethereum node, you would calculate that here, 32 Ethereum times the current price of Ethereum times about maybe 4%. And that's what you could put in here divided by 12, right? Or if you have stocks, you can look in your portfolio on, say, E-Trade or something of that nature, and it'll tell you what your estimated income is per year. Divide that by 12 and put that in here. So anything you have for dividends or staking, put that in here. So the altcoins that you've been putting money into, how much are those generating? Add all of this stuff up and put it into your dividends and staking. For the purposes of this, let's just make up a number. We've been investing all year into altcoins. We did okay. For the last 2 years, we're making $1,000 a month, right? So we're just going to put that in here, and that's what we're making on our portfolio income for dividends and staking. In our case, we were getting altcoins, so maybe we're getting $1,000 a month from altcoins. Now, real estate, let's say over the last couple of years, we were able to save up maybe $50,000 and put that into some kind of apartment real estate deal, and that's making us 5%. So we're going to say 50,000 times 0.05, and that's going to give us $2,500 a year is what we're making. So we'll say 2,500 divided by 12, and that's giving us about $200 a month. And then we have our business income. So let's say we have a couple other people working with us and we're getting a little bit of cut of that. Maybe we have 2 consultants that are working on some gigs and it made us an extra $1,000 a month. So we will put this in here like this. And then we had some extra capital, right? We had $35,000 laying around, or maybe let's say for the sake of this, we hit our $10,000 cap. And now we have an extra $10,000 more than we need because we kept saving it in cash. So we're going to invest in something like private money lending because that would give us maybe 10 to 12% on our extra money that's sitting around, which is much more than our bank's going to give us. So let's estimate that in here because I've done this before and it's a good way to make money. So we'll say we had an extra $10,000 and we decided to invest it in that times 0.10, and that equals $1,000 a year. 1,000 divided by 12 is making us about $83 a month on $10,000, which is not bad, and it's much better than sitting in an account for 3%. So now we have $16,000 earned income, we have our portfolio income of $1,100 a month, and we have $1,200 a month in our passive income. Now, we want to see these two right here raising up over time. This one doesn't matter as much. Earned income is just earned income. Its purpose is to buy assets that build us cash flow over time. So our most important numbers is right here and right here. So once we have all of that filled out, we have about $18,000 per month of total income. We need to fill out our expenses here. So what do we have? Well, we had our $2,400 in taxes. We had our utilities. I think we put that at $200 a month. We didn't have home insurance, but we had our car insurance. So we had 200 a month on that one. And then we had missed expenses of 500 per month. We also had a car loan we were paying 250 a month on, and that gave us our total expenses. Here is 3550. I feel like I'm missing something. Our home mortgage was 2,000. So we have about 5,500. So if you take our total income right here and you minus off our expenses, we end up with 12,835 left over per month, which is what we are investing into assets that are going to increase our cash flows right here over time. And these are going to compound because this extra like 2,300 a month is now also going to be reinvested and making us more and more money. So as these things grow, it compounds and exponentially grows. Next, we track our assets. So let's say, okay, we had that 35,000 in our bank account. So we have that waiting for us in case something bad happens. Now, if you had stable coins, you could put that there and split it up between your bank and your stable coins. For the sake of this, I'm just going to say we have it in our bank account right here. And then we had gold and silver, so we can put that amount in here. So let's say, over the year, what were we doing? We were doing about $400 a month. So 400 times 24 months, because this is over a 2-year period we were doing. So 400 times 24, obviously this is going to vary, but that's about 9,600. So let's just put some numbers in here. We'll say we had 5,000 we invested into gold, and we did about 3,600 into silver. And that should equal up to our 5, 6, 7, 8. Actually, I believe that is 4,000. So we have 4,600 into there. And then we had our crypto that we were building up. Now we had a lot of crypto happening. We had 1,600 plus 400 plus 800. So what's that going to be? That's going to be 1,600 plus 400 plus we had 800. So per month, we were making about 2,800 into crypto we were investing. So we have 2,800 times 24. We have about 67,200 into crypto. So we'll put that here. And of course, over these 4-year crypto cycles, these are going to go up and down. You're going to get exponential growth of, 10x or 20x, and it'll crash out 80%. So these numbers are going to vary, but we care about 4-year cycles, not what it is today particularly. So you can update this, once a year, once every half a year, etc. And then we have, if we were investing into stocks from extra income, you can put that here. So our rental real estate, we also had $50,000 into, so we're going to put that there. And this leaves us with $161,000 in assets over a 2-year period of time, which is not too bad. And we're going to see this number exponentially grow, but this is going to track it over time. Now, we also have stuff like our home, which are questionable assets. These don't make us money. They're just nice to have. So they're not really assets. They're more of a liability. But in some people's eyes, they consider them their greatest assets. So we'll put that here. Maybe we have a $500,000 home, and then maybe we have a $30,000 car, right? So this is what we have. Now, actually, we don't have a $300,000 car unless you're driving a Lamborghini. Okay, so we have 530 in questionable assets. We have $161,000 in real assets. So this equals up to, in a banker's eyes, maybe you have 691,000 that you could leverage for loans that we're not going to take because we're not going into debt for things that don't pay us or doing stupid things with our money, but that's what they might consider us having. And in reality, we only have 161 in assets that are paying us or hedging us against inflation. Now, if you have things like credit cards, car loans, etc., track those here, and these numbers should be going down while these numbers are going up. So this is how we track everything in here. And then we want to hop up and we want to look at our goals, and our goals should equal what we're investing into right here, right? So maybe we say our inflation hedge, we're trying to get, I don't know, whatever it is per Bitcoin. We're trying to get 1 BTC per year for this year. Maybe we're trying to earn up our cash of our 35,000, so we could put that here. we're going to try to build up our cash flow to, you know, $2,000 this year. And then for our growth, we're going to try to get, you know, I don't know, $50,000 into our crypto. And we're going to try to get $25,000 into our real estate for cash flow and for growth, right? Whatever these numbers are, whatever your goals are, you're going to fill these in right here, and then you're going to use these to figure out what you're investing in right here, and then you track them in here. But you use this to know exactly what to do per month, and you use this to know exactly what to do per month after your expenses, right? So this is a simple way to start tracking and figuring out what you're doing, because at the end of 5 years from now, I want these numbers to say, you know, millions of dollars down here. I want your liabilities to be zero. I want your goals to get bigger and bigger and bigger. And I want these cash flows right here to equal out more than what our expenses are. So our first goal would be, you know, this $43.50 a month. We want to build that cash flow up so it's more than that, so that we don't actually need to work. Then what we want to do is, like, we're saying, okay, well, we're earning $16,000 a month. We need to build our cash flows to be more than $16,000 a month so we could continue doing the exact same thing we're doing right now without even working a single day. If we don't want to, instead of hacking for money, we could hack for LOLs because we want to be there. So hopefully all of this makes sense, and hopefully this was useful to you. I know it's a subject a lot of people don't like to dive into because it's a pain point for them, but this is something you gotta get a handle on if you start making some good money with your consulting, whether it's via a W-2 and some contracting, whether you're opening a consulting practice, etc. You need to handle your personal finances. So hopefully this is useful to you. If it is, give me a like below, share this out, and I wish you well.